Okay, so here you have our first slide. So every quarter since 1998, we've been running a fantastic survey sponsored by BDO. We measure a number of key indicators: output, orders, investment intentions, export, recruitment, so on and so forth. And you can hopefully see here a really interesting view in terms of output and orders. Let me just move that out of the way. So here you can see this is the balance of change. So this gives you an indication of the direction of travel. It's by no means the magnitude. And you can see here that output has fallen to the worst record that we've ever noticed. We've added in some ghost bars on the right hand side, so you can see how this fared versus the financial crash, and you can see we've got levels very similar, but actually this situation with COVID-19 has been quite different. There were some early warning signs with the financial crash. However, with COVID-19, as you can see, things were relatively positive. We've been seeing confidence dwindle a little bit as we looked towards Brexit and now EU exit, but actually things really did kind of fall off a cliff. Both UK and export orders declined to levels comparable to the financial crisis. UK and export margins have also declined significantly. And even though we've been blessed to a degree with the coronavirus job retention scheme, redundancies are increasing, and we are seeing indications that firms are holding back on investment plans. Therefore, our manufacturing output forecast for 2020 has been revised to -10%. And then in 2021, we forecast growth from that low point of 5.8%. Looking at the macroeconomic forecast, we're expecting or forecasting right now a contraction of 8.2% for 2020 across the wider economy, and then 7% growth in 2021 off the back of that lower point. So now we take a look at the regional snapshot, and what we're doing here is measuring the confidence across the regions and the change in confidence. So those regions that are showing a darker blue area, like Scotland and the Southwest, are those that have seen the lowest drop in confidence. Those that are lighter blue, again, follow suit. So they're perhaps not as confident as Scotland, but feeling more positive. We then have those lighter kind of orange areas, Yorkshire and Humber, Wales, southeastern London, not feeling particularly great. But actually what stands out, sadly, the biggest drop in confidence that we've seen across the manufacturing regions is across the East and West Midlands. And really important and imperative that we've particularly got Andrew here today representing the aerospace sector, as we do feel that actually the supply chains around mobility, so aerospace and automotive in particular, but it'd be really interesting to hear Elaine's view, the footprint that we have that's so significant across the Midlands and brings so much wealth, high level and high value job creation. And sadly, because of the significant economic impact, we really are seeing quite a knock to the confidence in the local economy. Another thing that's worthwhile pointing out is also the grouping of the data. So if you were to look at those confidence levels of 2020 across the regions, the data is very tightly grouped, which tells us that actually this has been a nationwide impact. We typically do see a bit of a variance of confidence, perhaps it's cultural or perhaps it's down to the industries between the north and south, but actually given the COVID-19 situation, we are seeing that this has been a relatively consistent impact across the whole of the country. So we now look at the East Midlands. We've always been extremely proud of the East Midlands. It was once described by Mark Carney, the former Bank of England governor, as the bellwether of the UK economy. So you can see here we've got 291,000 manufacturing jobs based in the East Midlands. That is a decrease on 2019 of 14,000 jobs. But I must really give that an undertone. The East Midlands has been a stellar performer. So for the last few years, we really have seen it being the gem in the crown of manufacturing. It's had a great performance. So actually we shouldn't be too grim about the fact that we have seen a slight contraction there, because it is on the back of lots of consecutive growth. 12% of the region's total workforce are employed in manufacturing, and this is actually the highest proportion in the UK. So it just underpins exactly how important manufacturing is to our local economy. 16.1% of output is generated by manufacturing, and that is above the average across the UK that we see usually around 10%. So again, signifies that output and employment really in the East Midlands very closely tied to manufacturing. The East Midlands produces 7% of the UK's manufactured exports, and 49% of those are going to the EU, which is 1% ahead of the UK average, so a slightly more reliant region on the EU. However, manufacturing productivity, you can see there, sits at 82.4% when we compare all of the regions, which we'll go into a little bit more detail in just a second. On the right-hand side, you can see that 3 subsectors make up really half of the manufacturing across the East Midlands. So food and drink are a really big proportion there, and that's quite a good thing because food and drink is a really resilient subsector. Through hard times, you tend to make sure that you're eating and drinking still. Perhaps you will change your habits. Maybe you stop going out to hotels, restaurants. Perhaps you buy a different brand, a home brand, as opposed to maybe, something on a label as such. So food and drink tends to be more resilient. For the UK economy, we're forecasting that the sector, although it's had a really buoyant sort of springtime and we've seen consumer demand boom, we do think that the sector will contract at 0.2%, and that is because we've had that cessation of food and drink being supplied into hospitality. So quite a different environment then, for the food and drink sector. We've then got 12% attributed to transport equipment, so hence particularly Andrew and Elena are really important to provide their views there. And then we've got just short of 11% reliance on rubber, plastic and non-metallic minerals. If we think about food and drink and the rubber and non-metallic mineral sectors, they typically have a lower productivity level. So hence the East Midlands probably is skewed in its productivity levels there. If you were to look at a region like Cambridge, where you've perhaps got more medtech, you've got more pharmaceuticals, more chemical-based industries, they typically carry with them a higher level of productivity. So please don't think that the manufacturers in the East Midlands are not pulling their socks up. They absolutely are. So here we just can compare the output and orders. And actually what's quite keen for us here, you can see here the order level had quite a sharp decrease on the chart on the right hand side. However, we don't feel that that has necessarily pulled through in the output chart on the left hand side. So what that warns us is we may not be out of the woods quite yet in the East Midlands. So as you move on, you'll see some of our stats across the regions where perhaps we're not out of the woods quite yet. So let's compare the regional comparison. So up the y-axis here, you've got manufacturing productivity, and here on the bottom, along the x-axis, apologies, we've got the manufacturing workforce percentage employed. So you can see here, the East Midlands productivity is just a smidgen above that of Yorkshire and Humber, but it is the region that employs the most people in manufacturing. We've also highlighted here the West Midlands because the two economies are so connected and so codependent on one another. And you can also see there the UK economy and the average. Okay, so let's have a quick look at exports, and we've already touched on the fact that the East Midlands, 49% of exports go to the EU, which is 1 percentage point above the national average. We then have Asia and Oceania, 23% of exports from the East Midlands go to that geography, and then 14% do go to North America. What's quite interesting across the regions is I guess there is quite a variation. The Southwest there, less dependent on those exports as opposed to Wales. You're looking at sort of 60% there. And dependency on the EU exports has been quite a pressing issue you know, way before COVID-19. And really, it's in our mind's eye at the moment, as we're going through trade negotiations, we must see some clarity and certainty, because it's a big concern for our business leaders. Have they got the bandwidth to be able to battle what has been an extremely unique pandemic, and then face, you know, quite a significant geopolitical event? So that's how the world is looking from an export point of view. So now we'll just conclude by looking at some of our more recent data. And we've been doing 5 different surveys, or we've ran 5 surveys over the last 3 to 4 months around COVID-19. So this data is taken from our manufacturing monitor. The first one, you can see both of these charts. The first top left is from the first survey. The bottom right-hand side survey is from the second survey, and this is the percentage of firms that reported a decrease in orders by region. And you can see, actually, the first survey told us that the East Midlands cohort were saying 67% were seeing a decrease, so less than the 91% in Wales. So actually, that resilience in the region really was starting to play through. Let me just see if I can... we can also see then in the bottom right-hand side chart that the East Midlands, although we'd seen 5 percentage point increase in those firms citing a decrease in orders, it still remained a really resilient region. So hence my notes about, please, you know, don't think that it's not a productive region. We've got some nuances as to how the subsectors are built up, and actually this really shows that the food and drink sector in the East Midlands gives a really good bed of resilience. Here you can see the percentage of firms that expect to hit between 75% and 100% of their operating level by the start of 2021 by region. Again, the groupings are pretty tight, but you can see that the East Midlands does remain marginally more positive than the UK average, the most pessimistic being Yorkshire and the Humber, and the most optimistic being the South, East and London. So you can see there 69% of firms in the East Midlands expect that by 2021 they will be operating again between 75 and 100%. So this chart here is looking at the levels at which these businesses are operating now versus the start of the year, and actually the colours break down the degree of the operating level. So the lighter green showing full operating levels, and you can see here as we go down the colours, actually those that are light blue are operating between 1 to 10%. It's probably quite interesting to note that the East Midlands, we don't cite any in the light blue zone, so we haven't got anybody in that 1 to 10. The majority seem to be within the dark blue, the 75 to 99%. So again, it shows that kind of resilience, that optimism, and the fact that it is difficult to operate through these times, but businesses have remained doing so. And right now, 99% of manufacturers tell us that they are currently operational, which is a good sign. And then this just shows you the confidence levels. So up the left-hand side, you can see the number of monitors that we've ran. So monitor 1 was the one that was kicked off April into May. And then monitor 5 is the set of results that we released yesterday. So you've got the time series that is saying how many firms expect that it's going to take more than 12 months to return to normal trading conditions. So to begin with, you can see probably about 18% of firms believe that that was true. We then saw a degree of pessimism that was building. Then, you know, the results contracted a little bit. It does appear that actually that pessimism has continued to build in the last set of results that we've taken. We're also seeing that 53% of manufacturers are telling us that they forecast or they believe that they are looking at redundancies over the next 6 months. 50% have also seen an increase in the cost of logistics. So there are some challenges for us to grapple with. So a great reason why we really encourage a lively Q&A later on today. So I'll pause there, and Chris is just going to pop up a quick poll. So the results are anonymous, but please, if you could just take a second, there's 42 of us on the call, so if we could just take a second to complete this poll. and then we'll conclude and see how you're all feeling after that. Give it 20 more seconds and then the poll will have been open for a minute and we'll close and publish those results. Okay, Chris, if you wouldn't mind just closing off the poll. So 86% of you expected the narrative that we've just told. And then our second question, do you think the measures recently announced by the Chancellor will make a meaningful positive impact on business recovery in the region? Very interesting, 59% of you do not believe so. So thank you for that. Okay, so we'll now move into the second part of our agenda. And as I started in our introduction, we're really pleased. Make UK is the national body for UK manufacturing. We've been in existence since the late 1800s. But what's really important to us is to be able to partner and work with expertise in subsectors that we perhaps don't have the full insight or the geographic footprint. So this morning, we're going to go through 4 of our key chief executives based in the East Midlands. And first of all, I'm delighted to introduce Andrew Mair. Andrew is the Chief Executive of the Midlands Aerospace Alliance, and he's just going to share his views from the aerospace sector based across the Midlands for 5 minutes. So Andrew, over to you.
Thanks, Charlotte, and thank you for having us on today's call. It's a super opportunity for us to engage with some of our key stakeholders, so we're very grateful for setting this up. So this is the structure of the aerospace cluster in the Midlands as a whole week for both East and West. And I would say that the findings we've presented to Charlotte are pretty typical of our members who our industry is the second industry in the Midlands as a manufacturing industry. Of course, in certain places, it's the most important high-tech engineering sector. So here's the structure of the cluster showing that we really focus on the internal parts of aircraft. We don't make aircraft here in the Midlands, and therefore our sometimes has a low profile that you might expect. It's deeply rooted in the whole industrial infrastructure of the region, not only manufacturing companies, but service companies and a number of other stakeholders are part of our sector. And our industry also supplies other sectors, including those of our colleagues also on the call. Next. So the next slide, when Charlotte puts it up, is a graphic showing the impact of the current changes in the industry. Our industry also benefited from the growth that Charlotte is talking about. And we're therefore going to be very affected by the coronavirus crisis. Our portfolio as a region is very focused on the large civil aircraft that are suffering mostly in terms of demand from the airlines at the moment, where Rolls-Royce makes the engines for a lot of these aircraft. So this is a big East Midlands impact especially. But there are other companies across the Midlands that are also dependent on that particular segment of the market. So this is what we expect to happen to revenue in the industry. The red barred chart shading there gives you some sense of that. In terms of employment, we're now expecting that we'll lose maybe 20 to 25% of the jobs in the industry over the next 12 months. Next. So we put together a plan, which I've just shown you some headlines from here, that happens to have been published yesterday. Yesterday was the first day of what would have been the Farnborough Air Show. So there are a number of virtual activities taking place, including the publication of our plan. We've done a lot of consultation over the last few months, as like everybody, we've tried to find our way through the current situation, including with some of you on the call. So we're very grateful for that. And we've allocated a number of actions across these different headings that won't be a great surprise to many of you. But rather than go through all those actions now, you can easily find this on our website. We cover, for example, things like redeployment of people, protecting apprenticeships, ensuring that the large companies are paying the small companies on time, diversification into other sectors, so that Elaine and I are talking about the rail industry connection to aerospace, and innovation in terms of supporting small companies to be innovative and getting them involved in green aircraft activities, for example. Next. So to finish off, just a reminder to some of you and an introduction to others that coincidentally, we have just started a big ERDF project, which is led by the University of Nottingham's Institute for Aerospace Technology. We're the delivery partner in this, covering most of the Midlands. This is one of the biggest ERDF revenue projects that there has been, so the value of the programme as a whole is £21 million, half of that being funding. We're running events and activities that you'll again easily find on our website. We've been doing a virtual activity throughout the spring period. We ran a whole week of activities a couple of weeks ago to introduce everybody, and these are all open to members and non-members. We've done that since the beginning of the crisis. Expertise from our colleagues at the university and my colleagues in the MAA to support companies, including those that want to enter or diversify out of the aerospace industry. So we're very broadly defined here. The university has a number of technical support services, and we're also offering grants in a typically RDF fashion to small companies. We've got 4.5 million here available across the different LEP areas to companies that want to invest in innovation, defined very broadly over the next few years. So Charlotte, that's all I wanted to say today. Thanks again for inviting us, and I'll hand back to you.
Thank you very much, Andrew. And we're now delighted to invite Elaine Clark, Chief Executive of Rail Forum Midlands, just to give us some insight as to how the rail sector is feeling right now.
Hi, thanks ever so much, Charlotte, and good morning, everybody. I haven't got any slides, so I'm just going to talk to you for a few moments. For those that don't know the Rail Forum, we are a trade association based here in the Midlands, representing the rail supply chain. And we've got around about 200 members. Not all those members are based in the Midlands or in the East Midlands, but around about 60% of our members are actually based here in the East Midlands, and that's because of the history of rail to the region. It's a very important region for rail and has been for a very long time. An economic report that was done in 2018 demonstrates that around about 4.5 billion of GVA is added by the rail industry, and we're responsible for just under about 100,000 jobs across the region. That's across the whole Midlands, but it is actually skewed more towards the East Midlands than the West. I haven't got the total breakdown for East versus West, but it is skewed towards the East Midlands. And part of that is because of the historical link with British Rail, and before that the old rail companies, and obviously what is now Bombardier in terms of their manufacturing facility in Derby. We are a little bit different to aerospace in that we also look not just at vehicles but also at the actual rail infrastructure. So it's quite complicated, I think, for people who are not that familiar with the industry to sometimes get to grips with. But there's three specific aspects that we need to think about when we talk about rail. So we need to think about the infrastructure, which is owned and managed by Network Rail and the work that they do. We need to think about the rolling stock, which are the vehicles, be that manufacturing or be it maintenance. And then we've also got the operational part of the railway, so the operators, be that passenger operators or freight. So if we think about where we are currently in relation to COVID, I think it's probably fair to say that we've been less impacted than other transport sectors. And that's really because rail services have continued to operate throughout the whole of the pandemic. They've had to because of key workers, and you'll have seen that in the press and in the news. So what that means is that Network Rail has continued to operate as normally as possible. They've continued to maintain the track and the infrastructure, and they carried out quite a lot of their work over Easter and the bank holidays in May that they were planning to do. Not all of it, but quite a significant percentage. rolling stock has continued to operate. The operators have continued to transport people and freight. So although the services have been reduced, that rolling stock has also needed to be maintained. So what that means is that, you know, we did a survey back in May of how our members were finding the whole experience of COVID, and 89% of our members had remained open throughout the whole of the pandemic, not necessarily at full output, but they had remained open, and that's obviously put them in a slightly better position than some companies that have really had to shut down for the whole time. If we look forward, I think the situation is actually relatively positive, but actually also quite complex. So why I say that is that the industry is likely to be restructured over the next 2 or 3 years. Certainly the operational side of the industry will be restructured. It currently operates on a franchise basis that has come under a lot of criticism. So we are expecting some fairly fundamental restructuring in the industry over the coming few years. Having said that, it is actually quite a rosy picture looking forward. Bombardier in particular are very busy at the moment in Derby, as are other OEM manufacturing plants in the North East and in Wales. And a lot of the supply chain in the East Midlands does actually supply into Hitachi, into CAF, into Siemens, etc. But we have a big job to do working with people like Mate UK around the whole UK content of rolling stock going forward in particular. So that's something that I'll be working with Charlotte on, I hope, over the next few months and possibly longer term. Looking beyond that, again, a pretty positive picture in terms of the role that rail has to play in terms of coming out of the crisis with green recovery. We really have got a very important role to play in the whole UK net zero ambition. The UK's first hydrogen train has been developed here in the East Midlands by a company called Porterbrook in partnership with one of our universities in the West Midlands, University of Birmingham, and we're also seeing significant work progressing on battery technologies. And there's some really super opportunities there for UK suppliers, providing we can make sure they're in the supply chain to the OEMs. There's also a lot of talk about something called the Digital Railway, which is a major investment programme by Network Rail, and we are seeing record investments in rail infrastructure going forward. So we are not protected, but we have a real opportunity to ensure that we are doing everything we can to help everybody else with the recovery in terms of the investment that's being made in rail. This afternoon, we're launching an SME challenge around new technologies for lightweighting, and we're also doing work around the decarbonisation angle as well. And those are opportunities that I'm hoping that, as Andrew already said, we're working with Midlands Aerospace on. I'm hoping that those are opportunities that will enable other companies that perhaps haven't traditionally worked in rail to perhaps explore rail a little bit and perhaps get involved in something they haven't been able to in the past. So I'll pause at that point, Charlotte, and hopefully that's provided a little bit of an update for people this morning.
Fantastic, Elaine, and great to hear that positivity and lots of opportunity for the future. Thank you very much. Next, we're really keen and interested to hear from the Silverstone Technology Cluster. Silverstone has got a fascinating history of the old airfields that then led to the motorsport developing, and off the back of that, lots of innovation, medical devices being produced, automotive, aerospace. So a really fascinating area where lots of R&D takes place. So really, really pleased to introduce Pim van Barsen, who is the Chief Executive of the Silverstone Technology Cluster. So Pim, over to you.
Excellent. Thank you very much, Charlotte, and thank you for inviting us along. Elaine, just very quickly, very interesting to hear what you had to say. I would be delighted to work with you and see if there's opportunities for some of our members, because I know a lot of our members will be in a position to support some of the initiatives, especially when you mentioned lightweighting and decarbonisation. I'm sure a lot of our guys are right in that field. So hopefully we can touch base at a later date. In terms of the overview of the Silverstone Technology Cluster, I mean, as Charlotte has already indicated, it's not centered around motorsport. Motorsport is only about 20% of what our guys do at the moment. A lot of our guys would have had a basis in motorsport, but they've since all diversified into different markets. But it's very much focused, and our work is very much focused on advanced engineering, electronics, and software companies, and we very much exist to help the companies. In the area that is identified, there's about 4,500 businesses. The vast majority of them are SMEs. We obviously look after them and try to help them as best we can. We started in January 2017. We have about 120 members at the moment. We surveyed our membership, just as everybody else has, in mid-May. I suppose we were pleasantly surprised with the initial responses, in that it's probably not as bad as we anticipated it being. And I think it shows the resilience and the agility of a lot of these companies, because we are aware, and we helped a lot of the companies as well, sort of refocusing their production efforts on, like, the Ventilators UK Challenge, or production of PPE, and supplying that into Northamptonshire, for instance. But the results of the survey sort of came back. 63% reported that their operations had been reduced, but 35% reported that it hadn't significantly affected their business at all, which I was quite surprised by. Going into demand, it was very similar. 56 reported there was some reduction of demand, but 1/3 of all of them said that it was still really good demand, and it's largely due to their ability to switch from, making engine components one day to making ventilator parts the next, which was very interesting. We were very pleased to see that 58% of respondents didn't furlough any staff, or indeed made any staff redundant, and 21% only furloughed some staff. So the vast majority of our guys only furloughed, or didn't furlough anybody, or only furloughed a small number of staff. So again, I think that's a lot more positive picture than we anticipated. But through our conversations with members, it's that initial impact was probably not as severe as we anticipated, but it's moved into now, and I think it's reflected with what everybody's saying here, sort of a period of uncertainty, because we are getting reports of companies being busy and companies getting contracts back in, which is obviously great news. But there's still a little bit of uncertainty. Is that, like, well, is that just a positive blip, or is that actually the start of sort of a more sustained, is business really coming back? A lot of the views from our guys as well is that, things like seatbelts and things where, obviously it's a helpful offering. It's kind of like taking on a loan kind of only pushes the problem away into the future, and it's not really a viable solution necessarily. So quite a few guys have sort of shied away from that, and those who have furloughed staff are now in a position where, obviously, when we're coming back from that, it's kind of like, is there enough business in a sustained manner to keep that going? So there is sort of uncertainty and a bit of nervousness out there. We've obviously already seen that the aerospace sector has been badly affected, and that impacts a number of our members. Automotive, by some of our members, has been declared as being dead, and we've had a number of companies that sort of specialize in that, or I know of a couple of companies that specialize in both aerospace and automotive, so they're in quite a bit of trouble now. And so now looking at new markets is very much on their agenda. It's something that we're actively trying to support them with, and they're keen to move into that. Feedback that we've received as well from a lot of our guys is, to get funding in place for innovative projects. That's very much what our guys are all about. Very much focused on sort of the R&D and development. A lot of them have innovative projects of themselves that they would like to pursue. But funding is required for that. I've also had reports that Innovate UK made a great call for a bid for funding for innovative companies to move forward, which was great, but that has now been delayed, partly because Innovate UK has been overrun with applications, and so a quicker turnaround is needed. I've also getting feedback that better signposting on the available support should be out there, and I would encourage anybody who has any programs to get in touch with us, as indeed any of my colleagues from the organizations on the slides, because we would love to share that sort of information with our members, because I think the more we can share the information with everybody, the better we can. I also think we should focus on more smaller projects with more companies, as opposed to bigger companies with just a few. Don't always give it to the usual suspects. Try to widen it out in the whole net, to give the companies that confidence back that business is sustainable and they can make it run. Because I think this is now the critical time for a lot of our companies, that, you know, even though the initial impact might have not have been that bad, it's the uncertainty now and the lack of movement in some of the industries that we're seeing, and that needs to be addressed really. So really, you know, that's kind of what we're hoping for, that we can get some sort of stimulus to get the innovation going again, and breathe some new life and some confidence mainly into the companies that we have there. So I don't know how many minutes that was. Sorry if I've overrun, but I'll leave it there. Thank you.
Perfect, Pim, thank you. And a strong call for collaboration and future investment in R&D is what I take away from your 5 minutes, so thank you very much. And then finally, really pleased to introduce Darren Clark, the Chief Executive of Medilink East Midlands. And I think what was really interesting was at the start of the COVID crisis, as it became apparent in the UK, many of us spent time on the phone trying to understand how could we make sure that we could support the ventilator challenge. And actually we've really worked very closely with the Medilink team across the East and West Midlands, as many of our manufacturers have diversified to support the efforts towards PPE. So Darren, over to you.
Thank you, Charlotte. And I guess from my point of view, I trying to give a bit of a positive message from our sector. I guess there's nothing like a health pandemic to highlight the importance and the value of the healthcare medical sector. I think just initially picking up on the comments about collaboration, as you say, we've worked very closely with yourselves at Make UK, but also with Andrew and Pim, looking at opportunities within our sector. I did have a sort of a slide, but I can just read off really sort of my comment on that, which I think frames very well where we are as a sector, which is essentially a quote I picked up that says that as other markets struggled under the pressure of the pandemic, life science industry itself has unparalleled, if challenging, opportunities. And I think this is really highlighted in sort of 4 different areas within the sector. So diagnostics for detecting COVID, which is an indicator. Diagnostics is a key part of the sector. Drugs for actually treating, PPE for reducing transmission, and development of critical care products and other medical hospital care products to help save lives. So it really has been a sort of key sector during this crisis, and actually one that's largely stayed relatively robust. It is just worth highlighting the sector itself, broadly split into 2. So one side is pharmaceuticals, which is essentially production of new drugs. The other side is medical technology. Within the Midlands, largely it's medical technology. The companies that operate within the pharmaceutical sector are really part of the development chain for new drugs. There are very few that actually are developing their own drugs themselves. It's really dominated by a number of large pharmaceutical companies. But the Midlands within medtech actually has the largest cluster of companies outside of London and the southeast. And that's predominantly within the supply and service sector within medical technology. So whilst relatively niche sector in comparison to some of the others we've been hearing about, there are around about 1,000 companies that operate within the sector, employing about 24,000 people, which is actually the second highest number of employment within the UK. And it is a high value sector. So the average GVA per worker is around about 40% higher than the Midlands average. So whilst niche, very significant, and particularly during these times. Having said it's stayed relatively robust, there have been some impacts of the pandemic. One of those, I guess, is around there is some subsector variation. So whilst you look at the sector from a macro perspective, it's been very strong and robust. Within that, below that, there are some variations. So, for example, planned and elective surgery and procedures essentially stopped. which meant that any companies that were developing products that weren't focused on infection or on COVID did struggle initially and saw their cash flow just completely bottom out. The flip side of that was PPE and critical care really skyrocketed, which saw some interesting challenges in itself. One of those was around material supply. Another was from a demand point of view. So whilst there was unprecedented demand, it was pretty poorly coordinated in the beginning. And it was very difficult for companies to know where they were looking to supply, whether that was nationally or locally and regionally. Another challenge for the sector has been there's actually been a significant increase in counterfeiting as well, and particularly where we've had lots of people entering the sector new and not understanding the sector completely. Counterfeit products can be a big issue. Supply chain had been a real challenge because it was very much a global supply chain, and I think what the pandemic has demonstrated is there's a need for some reshoring of that supply chain and some more resilience within that locally. So if you see increases in spikes in infections, how do you supply that if you're struggling to get your materials? But I think my last sort of comment on that is really to say companies, it's a very innovative sector. It's driven by R&D and innovation, and companies have continued to innovate. However, that for any companies that are developing products outside of direct pandemic focused activities, a critical step has also stopped during the pandemic, and that's the clinical evaluation of products. So unless you can actually, as is going on now with the vaccine, do the evaluation of your product within patients, you can't get it to market. And if your product hasn't been COVID related, all of that activity is stopped. It's just now starting to come back through, so it's looking more positive for the future. But again, that's where this variation within the sector, I guess, has come. If you're doing anything that's elective or planned procedure wise, it's been a real struggle. So I guess sort of my messages for challenges to the future and recovery, I think reshoring of supply chain will be a key thing. There's a big question around product stockpiling, which looks at requirements for storage, but also the stability, particularly around PPE type products. There's never been a requirement for long-term stability testing because they tended to be products that haven't been stored for a long period of time. I think the last one really on that is regulatory challenges are going to be a significant factor for the future. There's already a lot going on around the leaving the European regulatory environment and what happened from a UK point of view. And I would say there's probably a bit of a crossroads that could be undertaken. One is towards the UK continue to position itself as a gold standard. So really the place to develop products and with high regulatory hurdles to overcome. If your product is approved here, it's likely to be approved anywhere in the world. The flip side to that is, could it become an easy market entry, so a rapid innovation development region, which would probably drive down the regulatory hurdles. So there's a bit of a question mark as to which way things would go. My last comment, I guess, would be that I think within all of this, and highlighted by us working together across the different clusters, is really improving that innovation ecosystem is more key than ever. And how we work together and how we support companies to develop the products and bring them to market will be a key activity. And I guess the MediLink plug to that is we are running a number of projects across the East Midlands that support companies in bringing their new products to market. And that includes companies that are entering this sector for the first time. So I'm conscious we're running out of time, so I'll leave it there.